Hello, everyone. Welcome back to our Financial Badass series. And today I'm excited to talk again with our friend, George Kroustalis, the author from the book, Secrets to Becoming a Financial Badass. And today, George, I'm excited because we're finally gonna be talking about like investing. And I know that's the most exciting part of your book. I'm really happy to ask you, we have been talking about like investing and finance and saving and all these concepts, but I really wanted to start asking you, what was the real reason that motivated you to write the book in the first place? Can we just start with that today, George?
Sure thing, Sam. First off, great to be here again, talking to you. So I get that question asked a lot, as you can imagine. And my first answer is always that it's in the prologue and introduction section of the book. So you should buy the book to read that. But in short, this was like divine inspiration that took over on one Friday afternoon when a complete stranger at a meeting we were having came up and thanked me for a message that he heard me say in a similar meeting over 12 years ago when I first started my career. And the message was, thank you, because I've got more money than I ever thought I'd have in my life.
Wow.
So the compounding effect of what this individual experienced over that 12-year period was life-changing for him. So on the drive back, as you can imagine, I'm excited. I'm thinking, my God, I changed this individual's life without even knowing him or knowing what I did. So I knew that at that point I had to put pen to pad.
Okay.
And in writing this initially, Sam, I really just wanted to write an investment book and just talk about these powerful concepts, which, by the way, are not taught in most, public education systems, but talk about these concepts of the time value of money and the power of compounding over time and what that means. Initially, that was the goal, but then I did my research and my due diligence and saw that America simply has a financial literacy problem. So I rounded it out and added things that we've already talked about, discussed a bit, which was, saving and the importance of that, how you got to get started, and then spending, how to spend wisely and not let, debt take over your life and run your life. And really the investing part is truly, this is how you build wealth. So more than half the book is dedicated to the investment section.
And to your point, George, it's incredible, right? Like how even in really good universities, we don't get that education, right? Like we don't get financial education. So a book like yours for like younger generations is so important because really that makes the difference on how can you build your life beyond your career, beyond your job. Like, we're not educated because we don't receive that in college. So having this kind of like education from a book like yours, it can totally make the difference in someone's life, like just as you just described. And I think that brings me to my next question, right? Like how do we build that wealth, George? Like you're an expert on this, like in your job, right? And so you really are an expert on your field. And so how do we invest?
Sam, on page 53, where investing begins,
Okay.
I borrow a quote from what we call the Oracle of Investing. You can call him the Michael Jordan of investing if you want. Any name suffices, but it's from Warren Buffett's in one of his past shareholder letters for Berkshire Hathaway. And it says, investing is an activity in which consumption today is foregone in an attempt to allow greater consumption at a later date. So we are investing for the future. And what do I need to invest for? What do I want my investment to do in the future? And this can be in real estate. This can be in crypto, if that's what you're investing in and believe that will go off. But it can be in public markets like stocks, or private markets like private equity or angel investing. The bottom line is, for future use of that money, I want it to grow as fast as possible. And that is what led us and my early interest in the stock market.
Okay.
So let me just start right there and just answer the question, because next question from you is probably going to be, well, why the stock market? So stocks are not just pieces of paper. When you buy a stock, Sam, this is you going out and buying, 100 shares of Apple. You are a shareholder of Apple. What that means is that you are an owner. You own a piece of this public entity known as Apple Computer. They pay a small dividend. You have a right to their quarterly dividend. The dividend is a form of payment that the company gives off every quarter, most of the time, sometimes semi-annual or annual, to its shareholders or owners. And you also, your money will be invested alongside with other shareholders who own Apple. And that was fascinating to me, how in our capitalist society, and many around the world, we can own pieces of companies. Now, why do I want to own a company? Well, great question. And of course, you know the answer. Over long periods of time, ownership in high quality, well-managed companies has delivered very attractive rates of return.
And with that, George, I guess, like that makes me think, right? Like when you're like a young person, maybe you don't see that much, into the future, but I guess you mentioned in the book, like how it is important to start early, right? And how, I guess that makes a huge difference from when you start on your 20s, right around your 30s and it goes on. And so I guess that makes me ask you, like, you talk in your book about like, compounded growth and the, I guess like you call it like, or it's called the time value of money. So can you just like explain us a little bit about that and how that is important to start early?
Compound interest is one, and I'm going to get to a famous quote here in a second about it being the eighth wonder of the world, but it is an amazing concept. So I give an example in the book. I ask a hypothetical question of, would you rather have $1 million today, or I give you a penny today and it will double every day for the rest of the month, and then you'll have whatever it's worth at the end? Almost everybody says, give me $1 million.
Like $1 million, yeah.
I mean, what, a penny? Are you kidding me? Well, believe it or not, this is a power of compounding. So it doubles every day. That means that it's 100% compound rate daily. 1 penny becomes 2 pennies, then 2 becomes 4 pennies. 4 pennies becomes 8, 16. You get the picture. We're going to do that for 30 days. We're not even using a 31-day month. You know what that penny is worth at the end of day 30?
How much?
So a little over $5.3 million.
Wow.
And that, if that doesn't get your attention in what compound is, now, again, there's no investment that doubles every day, but again, this is an exercise to give you the idea of, in 30 days, what 1 penny can turn into at that high growth rate. So the famous quote I'm mentioning, Sam, was Einstein, when he said, compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. And we talked a little bit about this in the spending section about high interest rate credit cards, and they are almost impossible to get out from under if you're just making the minimum payment, because interest is killing you. But if you are investing in things that are earning that higher rate of return, it gives you the power to really grow your money and build your wealth.
That's incredible, George. And I guess I would just ask you, like, can you just tell us, like, a little bit more about stocks? Like, what do you find like unique about stocks? Like, why do they make you feel so passionate about? Like, give us just a good.
Well, some of the other things that I mentioned earlier, some of the other potential investments, listen, real estate, private equity, or investing in private companies. These are, a lot of times opaque, and they're much more illiquid, which means not easily transferred and easily owned, easily bought and sold. So the stocks are a publicly traded equities. And then we also get into fixed income, of course, which I know we're going to leave for a later episode, but that's debt of a company, which also trades publicly and most of the times daily, if it's, liquid enough company, and a liquid enough security. But the fact that anyone can buy a share of great companies and own it and participate in its fortune, or participate unfortunately if it's not a great investment, and the fact that you can sell it daily, it's very powerful to me how one can embrace this, because it allows anyone to embrace this. Very difficult for me to say, you're going to graduate high school, you've got to start, go out and build a real estate empire.
And all of these concepts sometimes seem kind of like intimidating for a person that is new in finance, right? Like, so do we need to have like a degree in finance to start investing, George, or what would be your advice for like someone that is maybe new in this?
And the advice is, go out and buy this book and you will get your first taste. And I even make an extra adamant point about the fact that you don't need to read the Wall Street Journal every day. You don't need to have a finance degree to become a great investor. You need to have logic, patience, which is very difficult at times, especially times that we're living in right now with, markets wildly volatile, and, 100-point swings daily have become, common theme here. But there's a lot of virtues to becoming a successful investor, and none of it includes having, high-level finance degree and education. So I really believe anyone can do it. Anyone that wants to learn, anyone that has a passion for this. And if you don't have a strong passion for it, learn the basics, do the right things, and you will have your long-term account grow over time, because we haven't got into it yet, but we're going to show you some numbers. Once you get into 10, 15, 20, 25, 30 years, with that much time, and Sam, you mentioned earlier, the younger audience, with that much time ahead of you, I make the point, there is no reason to not be wealthy by the time you want to stop working, when you give yourself that much time, because it's not a linear growth. It's exponential.
And with that, George, thank you so much for your time, George. I really want to, thank you for what you're doing for younger generations, like for educating us, for sharing your wisdom from all these years that you have learned on how to be a financial badass, George, and that we finally can just read it from here, learn from you, and hopefully we can see you more often, maybe in your YouTube broadcast channel or whatever other tools you will have out there, I'm sure. So thank you, George, for your time and for sharing your wisdom with us in your book, Secrets to Becoming a Financial Badass.
Thank you, Sam. Looking forward to future episodes.
See you soon.